Welcome to Momentum Monday. Today is Sunday, October 20th. That's a really nice t-shirt, Howard.
It is. It's Rafa. I'm Team Rafa. They don't know it because they don't care about me, but I love their product.
Like Rafa Nadal, the tennis player, or someone else?
No, it's a cycling brand.
Oh, okay.
This stuff would look good on you, but you're cheap. You wouldn't spend the money. I'm the idiot that spends money on expensive stuff.
I'm not cheap at all, but that's fine. You don't know me that well.
Bulgarians are cheap.
No.
Look it up on Wikipedia. It says
that's fake news.
There's a link under Bulgaria on Wikipedia. There's a link to cheapskate.
No.
That took about 3 seconds for me to insult the whole nation of Bulgaria. Meanwhile, I need to go to Sofia.
Yes.
I had a girlfriend named Sofia.
Oh, good for
Are there a lot of women from Bulgaria named Sofia?
No. That's a very rare name.
That's just fake news that I heard?
No, that's a rare name in Bulgaria, but that's the capital of Bulgaria, Sofia.
Okay, listen. It's been bothering me for about 2 years, and I'm going to bring it up.
Yes.
You put something on your wall. Like, can you just, like a flag of Bulgaria or something?
I have my books, 2 of my books.
You could take those off the wall, and we can just spend 30 seconds talking about your books each time. It just looks like you're homeless.
That's my home office. That's how it looks like.
No subscribers.
That's my decision, Howard.
I know, but I'm trying to like spruce up the place.
Okay. I'll hire you as my internal designer, okay?
Let's get to the markets. Not that I'm any better at that. Let's get to the market.
Okay, share.
How's the workout going? I did spinning today. I'm like on the road, so I can't do my
workout going great. I play volleyball a couple times a week, and
shirt on, shirt off.
Usually off. It depends on the weather.
Woo, ladies of Momentum Monday.
There are no ladies watching Momentum Monday, Howard.
You don't think there's one? I think there's a few ladies. There's a couple women. What would you say our percentages?
Probably 97% really smart men, and then 3%.
How's that one to our audience?
The occasional one who just only watches the first 5 minutes of the show. So
I get the 5 dummies that email me and yell at me all week. So you're saying you get 100% smart people, and I get the 5 dummies?
Yeah.
All right. I deserve that. Okay, let's get to it. Ivanka.
All right, we're looking at the chart of the S&P 500. I think we're back in a range, kind of. It's consolidating near its all-time highs, around 300.
Yeah, I put on some puts. I'm leaning against that, which means they're going to stop me out on Monday or Tuesday. I don't know. I think I just a gut stupid trade that I got on. Okay.
I mean, Nasdaq 100 looks similar. It's ran up to its all-time high.
Fascinating. Ivan, like the stocks that I follow are getting annihilated in the Nasdaq 100 because of Apple and Microsoft. Is it?
I mean, that definitely enterprise software has been acting.
That's bugger.
In the past couple of months.
Yeah. Go to a weekly on software, and people can say, like people are buying this dip, do not realize that, like, no. I mean, basically, software stocks have now rolled over and gone nowhere for 18 months, Ivan.
Just like the market, but if you take a look at some of the individual names, I think some of them might have more room to drop, depending on the market.
Yeah, I'm not buying this dip just because the market's rotating, and I want to find out what I'm in the. Wow, yeah. I mean, I'm a little bummed about Twilio because I'm super long. But the way the markets work, it's kind of pulled me out of. Luckily, I was selling some of these on the way up, and kind of in the retail and consumer, McDonald's, Nike, Lulu. They're kind of just biding time and drifting higher. It's amazing that Nike, Lulu, and Apple all, like, just if you had told me that these would be the companies leading, I just wouldn't have thought that. If, in December of last year, definitely got the rally in software right. It's an interesting market.
It seems like a deja vu to, I don't know, 2010, 2011, when we had all the high end and the super big discounters leading. Like, because if you look at something like DG, Dollar General, they're also at new all-time highs.
You shopped? Like, who's shop? I mean, I guess, yeah, all of America. There's no middle class, so it makes sense that the middle class stores like Nordstrom, all the mall stores are a disaster. And it's and the dollar stores and the high end brands are crushed. I mean, it kind of makes, the market kind of makes sense there. I just have never been in a Dollar General, so I wouldn't have known, to buy it. God, how good does Apple look, Ivan?
Just looks amazing, and it's the biggest stock in the world. So is it bigger than Microsoft? Let's see.
Yeah, I think because Microsoft is more software, that's why it's not acting as well as Apple, right? It's like anything with software in it and is in a pullback mode. And I just wouldn't have predicted that Apple will be leading. But it's definitely hidden some of the carnage in the market, right?
I mean, software had its time. Like for 2 years, it was like a shining star, and anything related to software outperformed substantially. And now things have reversed. Now we have because market money managers often think in terms of themes. So we had that theme of invest in software for 2 years, and now that thing has reversed. After
software's taking a breather. Trust me, the margins are there. The true software companies are, when you can buy stocks in 50% pullbacks. We're not there on the big names yet, but we're in the 20-25% range. Like if we pull up Zendesk, right? I'm not interested in Salesforce, but if we pull up Zendesk, I sold that in the 70s and 80s. If we pull that back in the 50s, I'm just getting long. You know what I mean? Like, there's still no competitors, public company competitors to Zendesk. So where's the market cap on this? Let me just look.
Oh, it's right here, 7.1.
Yeah, so in the 5 billion range. So again, you're right. Like these are untouchable right here, relative strength. There's too much good stuff, and they're still trading at a bazillion times earnings. So you can't catch the falling knives in it. Okay, so let's go to what's working. I mean, forgetting like software is just tradable but untouchable pretty much. So let's.
I mean, let me just add a couple sentences on software. I mean, valuations still very steep. So until someone like Salesforce step up and buy one of them,
good point.
It will be hard. And as long as we see someone step up and buy, we might see a reversal.
And there is a reason to rotate into value. Interest rates are low. There's going to be a ton of acquisitions. And if these value stocks get a little bit of a bid, they're banking, everybody will start doing deals. Okay, so now going to that, Ivan, what do you see that's working?
I mean, for the past couple of months, the momentum leader has been home builders. Believe it or not.
So let me walk through what I missed. Do you own any of these? Were they showing up on our momentum list, Ivan?
Yes.
What did I miss? These have been for our subscribers. These have been on the SL. These have been on the SL50 list.
Yeah, some of them like MTH. It's
an Arizona company. I know the CEO. Wow.
It's been very interesting rotation, from software into home builders. I cannot really explain it fundamentally. Just what is.
Look at that breakout when it went from 50 to 60.
Yeah, it was a big gap. So
that was the gap. Jesus.
And all of them look
at a business in a way. This was almost like. What's the market cap on Meritage?
Oh, let me go back. Let's see. So 2.8 billion.
Okay, and then what? Trading at fucking 10 times earnings. I mean, these things are so cyclical.
Yeah, they are. And all of them have been just looking amazing. All the home builders, all the building material stocks. And interestingly enough, Zillow, which is also housing related, has been a huge dog after the past earnings. And found some support near 30. Now they're trying to bounce. let's see if it can follow through.
Yeah, but these are not cheap. It's going to lose $1 next year a share, so it's like untouchable. This is why this switch to value is finally on. Value, everybody wrote that value is dead, and sure enough, these stocks have doubled. And so you can't chase these value stocks because these are very leveraged.
I mean, many of those value stocks also pay decent dividends. So, I mean,
Does Meritage pay a dividend?
They don't. But for example, let's take someone like Verizon. They pay a 4% dividend. Look how it charts look like. Look, I mean, that's a super constructive chart.
So you've been earning 4% a year, and as long as the stock's not going down, that's incredible.
Well, it's better than
that's incredible. You park your money in Verizon. They don't answer your calls, but at least they pay you interest. What an amazing. Listen, in hindsight, over the last 4 years, you've made 20% on that with no risk, and you're up a few percent on the stock, but you're earning 4% on your money.
Oh, this level here at 61 is big. It's going
big. You're right. I mean, I don't think, because these aren't growth stocks, I don't think. But you know,
I mean, they
all-time high. That is incredible.
Their earnings since 2012, so they're growing as well.
My goodness. I can't bring myself to that, but I'm with you on Verizon.
No, that's fine. I mean, so as you know, earnings season started last week. And,
yes.
So far, we're seeing mixed messages. The market is reacting really favorable to banks, to the JPMs and the Morgan Stanley and all of the regional banks. We're seeing favorable market reaction.
Well, okay, so I'll argue on this. Just JP Morgan.
Not super exciting, but
no, but just JP Morgan. Where else have they acted well? I mean, these things.
But compared to stocks like MongoDB or Netflix.
Sure, but let's be honest. Just JP Morgan in the financial sector. Okay, so software's dead for the moment. Housing is interesting. Value is in, especially if it pays a good dividend, and that's probably where JP Morgan fits into. They must have a good dividend.
Exactly. Yeah, they're among the dividend payers. Yeah.
Yeah. Okay. So Verizon. What else on the dividend side is interesting?
I mean, anything basically.
Yeah, I guess.
Campbell's kind of 3% dividend is.
Yeah, if you can catch one of these, I mean, you can get why big money would be chasing this, because they get the dividend and they could have some upside, and they don't have to pay massive earnings per share. And then once a few quarters of this goes on and software underperforms, it just feeds on itself. Look,
last week we touched on this subject that many money managers cannot just go to cash; they just rotate. And you're a little bit defensive, you're not sure what's going on, you just rotate into high yield, more defensive sectors. And when you have to chase returns, you go after the high growth names. And we're constantly seeing that cycle of rotation.
And Apple probably pays like a 1 or 2% dividend.
They do 1.3 right now. So
yeah, I mean, so I guess I'm getting a dividend there. Is Nike pay a dividend?
I don't think so. Let me double check. Yeah, they do a little bit.
Okay, so what else is working, Ivan? So housing, which doesn't interest me. Some value stocks, I get it. Verizon, wow, where's AT&T? I have to say, like, for those that don't, and I have a lot of friends that own Verizon, you know, kudos.
Yeah, it's acting constructively as well. It's rising. So I
wonder why AT&T is so much weaker than Verizon in terms of relative strength.
I have no idea.
Huh. Okay. 5% yield, Jesus. I mean, that's real money.
It's funny that we're not talking anymore about earnings growth and sales growth.
Well, I think earnings growth comparisons, this is a down quarter. I was talking to Charlie Bilello, and he said this is the first quarter in a while that's going to have negative growth. And so comparables are pretty hard. So that's
why people were rotating into the defensive names.
Yeah.
Maybe no matter what happens with China, maybe the US will have like a minor short-term recession.
I think that's what Charlie was telling me. He thinks it's going to be such a minor recession. And if it's not a horrific one, Trump's going to say it's fake recession anyway. So I think we're seeing a minor one. I think there is carnage, obviously. If you own, like, I mean, there's a lot of whipsaw going on in software. Uh,
Absolutely.
yeah, so it's over my pay grade. And they're not cheap anyway. So, to buy the dips on these is very dangerous. So I'm going to avoid doing that. And I just got to I really have to debate, where I get stopped out of some of these because, if the sentiment really changes, these can drop 60%.
Oh yeah, absolutely. I mean,
Yeah. I don't think people understand that own them. I'm long elastic, a mess, but again, I'm not worried about it, but I don't want to, buy dips here when they can drop, 40, 50%. So you got to kind of wait for like the IPOs of Uber and Lyft where they're not making money. No, I just can't. Oh, wow. Zoom's interesting to me. If that breaks the IPO.
if it pulls back to 60, it'll be interesting for a bounce. It's
yeah. Zoom is my favorite product right now. I mean, we run our show off of it. You love it, correct?
yeah, I love it. It's free.
I use it for every meeting, but it's just massively, the valuation's ridiculous. But when these things turn, it's the best products that will bounce. And Twilio, Shopify, Zendesk, Zoom. You got to build your list. But you just can't. If you own them, great. You just can't really. You got to really buy panic. And the VIX right now is like 13. So for those people that are just getting excited about buying the dip here, be very careful.
Well, so many of those names
went up. I think, like you said, Ivan, the institutions are like rotating out, so they're not just going to rush right back into software.
Yeah, so keep in mind that many of those names, software names, went up 300 to 1,000 or more percent in the past 2 years. So even if they drop 50%, they'll still be substantially above where they open.
And if the rotation's on, Ivan, the way money managers work, they'll sell all the rallies, not buy the dips.
Exactly. So, trade them because they're very volatile and they move a lot. Good, excellent trading vehicles, but longer term investing on the long side might be trickier until we see some acquisitions in the area, and probably we need to see further price declines to see acquisitions.
And I would say the biggest takeaway right now, and I've been saying this since before the summer, is people need to remember now that you can buy Verizon, you can step up your size because they're not going to move as much, and you can buy home builders on dips. But people have to temper their enthusiasm for these 300-400% gains in breakout stocks because these companies are, not going to
want to make 100% in Verizon.
If Verizon went 20%, that'd be a massive move with that dividend. So you have to position size accordingly and manage your expectations in a market which is not paying for growth right now. The rotation's on to value. Could switch, would have to switch pretty soon. I don't think it's going to switch with the China no resolution. I mean, Apple's cheap relative. That's why Apple's doing well. I mean, the earnings are there.
Yeah, definitely. Apple is.
Find me a couple other winners. Some biotech. Like where else are we seeing? Is there any growth stocks doing well? Like growth?
I mean, every week there's some interesting names.
Yeah. So, wow.
Rita Pharma. They had a huge volume breakout last week, and that's why I keep telling
earnings or on news or on earnings.
If you're a position trader or even a swing trader, just pay attention to huge volume breakouts like this, because they often offer immediate opportunities for short-term traders, but they also good opportunities for position traders. But when you see that what is almost 10 times the average volume in a stock that is substantially, that means that there's some serious buyers, and this stock is likely to offer.
Especially since it went sideways for so long. But for me, Ivan, it's just hard for me. This company's going to lose $7 this year. Sure.
It's a trade. I mean, it's.
I don't know, man. I am literally going to just cut my toenails for the next 6 months with this type of.
So yeah, on the Momentum 50 this week, we have Chipotle. I mean, they report earnings this week. There's so many reports in the next few weeks.
Okay.
They look well.
Mm-hmm.
Report on Tuesday.
They're the strongest of the restaurant stocks because you said Shake Shack was pulling back. CDW, this is a computer distributor.
Shake Shack, he's also been acting kind of okay, but definitely below the 50, below the 20-day. So until it can recapture the 50-day.
I tell you what, I'm in New York, Ivan. They really are busy. They really have opened a lot of stores in New York.
That's fine. I'm just talking about the chart. I'm not talking about their.
Yeah, I know. I mean, I'm not a Shake Shack guy. I'm just saying, like, they really have done a good job opening stores, and it doesn't feel. Obviously, they can open just tons and tons and tons of stores. Okay, next, keep going through the list.
So let's see.
Yeah, Apple, Lulu, all my favorites. Okay.
EW also setting up new all-time highs, but on Wednesday as well. It can go either way. No clue how the market will react.
Yeah.
So
I'm not a trader. Okay. What's this top building material?
Building material stock just keeps going slow.
Okay. Doesn't excite me. Oh, Google's in there?
Google as Gen. Yes. Let's see Google. It's kind of building a base.
Yeah, but I could say that for the last 2 years.
Well, yes.
I mean, I'm long. It's one of my top 5 positions, but like watching paint dry. But the relative strength is holding in there.
Yeah.
Okay.
Google. What else? We have Restoration Hardware.
It kills me. I just love that company. I love everything about it. I've been shaken out of that stock, and I can't trade the Restoration.
Yeah.
I was the guy. Where was I that I got shaken out of this? Probably right after that crash there in March of this year. Played the earnings at around 130. Yeah, I got just hammered. And it's just another one of those, Ivan, where it's like the opposite of Dollar General. There could not be a more expensive, like, you know what I mean? It's not middle America. It's not mid America. It's like upper middle people with 2-3 homes that can quickly go in there and spend $100,000 on furniture and just have their home done. So it fits with that thesis of it's like a Lulu, but of furniture. Of furniture. Damn, it really is fashology, and I kind of missed that one, so I apologize, everybody.
Deep discount and kind of high ends with companies who really specialize in a niche.
Yeah. Okay, Globus Medical. That's interesting. Another medical instrument company. So IHI is on my 8 to 80 list, and it's just these medical products.
It's building a base. And what was ETF? IHI.
Yeah, you can't. That's just holding in there. But this is like for you buy the dips, kind of the big dips on this. I'm not a buyer here. And the 220s, 230s at the. This interest, but this has held up really well, and these medical instrument companies are still
big earnings breakout last week.
This is the robotic surgeon, Divinci surgeon stuff.
Yeah.
This is probably one of the best stocks of all time.
Yeah, I think it is. Yeah.
Oh yeah.
From $3 to.
I think I've owned that at like $5, like way back in the day.
Well, we could have been retired if you kept it, right?
Yeah. I think there's some doctors that really understood this and have owned it. Okay. All right. So in terms of the market, anything's possible here. It looks very strong in this rotation, but it could also could take its time here breaking out because of the headline news.
Yeah, it's a market of stocks. Earnings season, we'll see a lot of gap ups and gap downs, and I think it's a good season for earnings speakers. And
okay, all right. Have a great week, Ivan. Thanks for doing this.
Thank you, Howard. Let's see, how do I? All right.